Okay, you are welcome. As today we'll be looking at our smart money concept SMC, and we'll be discussing about the dynamics of SMC market structure. We know what is SMC smart money concept. Okay, so what I mean by the dynamics is that we have different type of market structure that can happen using smart money concept. We know that this is the general market structure that usually happens with SMC. This is a bullish scenario whereby market is making impulsive move, corrective move, impulsive, and then price come back to take out the inducement. After inducement is taken, this high point to be confirmed. Then we want price to make another type of impulsive move again to come and take out this high point, thereby making here to be what a break of structure when there is a candle closure at this spot. Then this structure will be confirmed as what, as break of structure. Then this pullback, this first pullback will be confirmed as what, our inducement. Then the low point is already confirmed because candle closure above this high point, making this structure what, a valid market structure that has inducement, break of structure with candle closure, and then it also has another inducement, anticipating price to come down to take out this inducement, probably tap on this other block, and then continue to buy with the trend. Okay, this applies to bullish and bearish market also. This is for bearish market, just the same scenario. Okay, so what do we do here? What is the dynamics of SMC market structure? Is that this market structure type always appear simultaneously in the higher time frame and lower time frame. What I mean is, when the higher time frame gives this type of structure, in the lower time frame there are thousands of this type of structure that might have happened for this higher time frame structure to be fully completed. All right, so for us to get into that fully, let's analyze it little by little. There are macro structure. Macro structure is used for major time frame, which is for higher time frame. Then we have micro structure, lower time frame or entry time frame structure. It's used for lower time frame or entry time frame structure. Then when you have a type of impulsive move, just one leg move of different candlesticks, just moving in a straight line on the higher time frame, by the time you switch to the corresponding lower time frame, you see the type of market making this type of movement, whereby we have high, we have low, high point, low, high, low, just like that on a regular market movement. Okay, so but when you take it to our SMC type of market movement, when we have this type of impulsive move, price might just do something like this, which is in this impulsive leg, whereby we have different type of candlestick just making just one major impulsive move. Okay, now by the time you switch to the corresponding lower time frame, let's assume we are using daily time frame as our major time frame. Okay, so by the time you switch to the corresponding lower time frame, which is our 1 hour time frame, now in this scenario you will see this type of structure just forming only on this one leg of daily time frame impulsive move. Okay, so by the time you switch to the lower time frame, which is the 1 hour time frame right now, you will see this type of movement whereby market will give this type of market structure, price take out inducement, and then we have break of structure, another inducement is formed with this pullback. Then we now have something to anticipate that price can come to this inducement point, then come to this other block, continue the trend to move with the higher time frame impulsive move. Okay, and it might happen that price might just fear this lower time frame other block, thereby making a change of character. So by the time, there are many times that by the time you now look at the higher time frame impulsive move, this impulsive leg, by the time you now look at it, when there's a change of character in lower time frame, when you look at this impulsive leg, there might be that this impulsive leg is now making what, a corrective move. Okay, so a change of character in the lower time frame can cause a corrective move in the higher time frame movement. Okay, then before we now have another continuation and impulsive move again. So probably when price has now changed from the lower time frame change of character and move upward to continue this trend, By the time you switch to the higher time frame, there might be that the higher time frame is now already in the impulsive leg again. I hope this is okay. So let's go into this particular dynamics of market structure proper. So there are some cheat code. Generally, it's cheat code for taking advantage of the opportunities of micro and macro structures is this. Most often, this doesn't happen always, okay? Don't get confused. But most often, by the time you see that after you have marked out your market structure on the higher time frame, in this scenario, the daily time frame, okay? So higher time frame inducement point, you will notice that by the time you go to lower time frame is going to give you a type of structure, market structure, that when the higher time frame make it pull back to that higher time frame inducement, but in the lower time frame it will be a change of character. It will now become lower time frame change of character or structural liquidity sweep, which is the lower time frame that is at that point of higher time frame inducement. Now by the time price take out that higher time frame inducement, two things can happen in the lower time frame structure, either with candle closure, and we know when we have candle closure that will cause a what change of character, but when we have wick, that price just sweep the wick, the low point of the lower time frame structure, that will cause what a liquidity sweep, which is structural liquidity sweep. That is okay. All these things I've taught them in the previous videos. I hope if you have been watching and studying them, you can easily get along with this. If you have not, just check them out. All these things, they are paid content, but I'm giving you for free so that you can be able to improve in your trading journey. Okay, so this is a pictorial representation of what I'm talking about. You can see that in most of my teachings recently, I'm not using candlesticks like I'm not trying to draw candlestick just like this. We have inducement, break of structure, then this type of candlestick, making pullback, inducement. Why I'm not using that, because there are some people, they will just get used to a particular pattern of candlestick movement. Then when price want to play funny, they may make mistake or we not know what to do. To avoid error, I'm using this type of drawing to talk about the movement of price with a candlestick in the market. Okay, so looking at this type of structure, this is our regular structure whereby price is making impulsive move, impulsive, corrective, take out inducement in the higher time frame. Then after inducement is taken, higher time frame we want break of structure. After break of structure, price gave inducement again with this corrective move, then impulsive move again. At this point, this is the inducement point of the higher time frame, right? The inducement point of higher time frame, what we want price to do is that price should come back to this inducement point, take it out, and continue to do what? Continue with the trend, which is either buying or selling. But this time around, we want price to take out the inducement and continue to buy, either after taking out inducement, or if there's other block at this low point, if there's other block, price can tap into the other block and continue to buy. But there are some times that you just see that price will just come, take out the higher time frame inducement, and then probably if you are still waiting on the higher time frame for entry, you might not see your entry. But there are sometimes if you go to the lower time frame, you will see your entry perfectly. What can happen here is this: by the time you switch to the lower time frame, this green circle I marked there, you will see that price can give this structure number 1 or structure number 2. They are the same thing, but two things can happen. By the time when price from the higher time frame make a pullback to this inducement, whether with candle body closure or with wick, okay, so if price take out that higher time frame inducement with wick, what can happen with body closure? We can see that price in the lower time frame will now take out the lower time frame inducement. Then in this lower time frame, price can give change of character with candle body closure. We know that when we have candle body closure below a main structure low, that is a change of character, okay, because the market is making bullish movement before, but now that there's a candle body closure, market is now what? It's now anticipated to be selling in the lower time frame. Although remember, the higher time frame is still what? It's still bullish. So anything we want to do in the lower time frame, we have to do in respect to what the higher time frame is talking about. Higher time frame is bullish, so our attempt in the lower time frame will also be what? Will be bullish. If higher time frame is bearish, which is selling, our what we'll be anticipating in the lower time frame will also be what selling. So in this scenario now, higher time frame is buying. We want price to get back to this higher time frame inducement. Then by the time you switch to the lower time frame, if you see this type of structure form in the lower time frame, price take out higher time frame inducement, but lower time frame, it is a change of character. Then you know what to do when there's a change of character. The entry modules to apply. By the time you have refined them, all those things, I've taught all these things already. This is just to make some refinement and make your trading more better. So price can cause a change of character in this lower time frame after price in the higher time frame get to the inducement point, or price can cause a sweep of liquidity in the lower time frame. Now price get to the inducement in the higher time frame, but in the lower time frame, after price take lower time frame inducement, then price get to this lower time frame low point. Instead of body candle closure, it gives a wick, but probably give our morning star type of candlestick pattern. Our morning star pattern, when it forms with low point sweep, what do? We have a direct entry to make, and then our target will now be this high point. Whereas in the higher time frame, if the lower time frame give our structural liquidity sweep entry, by the time we are buying, you see that the higher time frame also will be buying, and our target on the higher time frame will be here, which is going to be almost the same thing with the lower time frame high point. This is just very easy. I believe if you have been studying and understanding our entry modules, market structure, all this, why when you see this type of things I'm explaining about, it's very easy to understand. This is just to add to the knowledge you have already, to help you out, to ensure that by the time price give higher time frame inducement, you want to enter, you ensure that yes, that point of inducement of higher time frame, the lower time frame structure automatically becomes the low point, which is higher time frame inducement automatically becomes the low. That's if price is buying in this situation, the low of the structure of lower time frame structure. This is the low point of lower time frame structure. So our higher time frame inducement automatically becomes the low of lower time frame structure. That is not confusing, Abi. Yeah, higher time frame inducement. By the time you go to the corresponding lower time frame, you see that the structure on the lower time frame, the low point automatically represents the inducement point of higher time frame. Then the same thing happens for this one too, and the higher time frame inducement automatically becomes the lower time frame low point. That's for buying structure. Then for when price is selling, it's the same thing. The higher time frame inducement becomes the high point of lower time frame. All that is very understandable. All right, so that is it. So this information, I hope it will help you to improve on your trading, and then by the time you get this understanding, I apply those entry modules, you refine them into these structures. I believe you'll be very profitable. I wish you the best. Have a great time.